Ladies and gentlemen, welcome to another episode of Money Talks, an exclusive conversation with some of the most brilliant minds in business, entrepreneurship, and finance. Today, we find ourselves once again in beautiful Miami, discussing crypto, discussing decentralization, discussing alternative ecosystems for financial products and financial plays. We talk about crypto, we talk about the markets, but it's time to bring experts to converse these things. Today, we have Rich Rines, core contributor or initial contributor of corendao, one of the hottest projects inside of the Bitcoin ecosystem, inside of the top 100 multi-billion-dollar market cap project. Today, we're going to be discussing what it takes to build a project, what it takes to be involved in the decentralized space, what it takes to be in the business game, and what it takes to build a billion-dollar ecosystem. Rich Rines, welcome to Money Talks. How are you?
Doing great. Thanks so much for having me. Excited to chat.
Now, before we get started and we start talking about how you got into crypto, how you got into getting involved with a project, building it out, getting it to $1 billion in valuation plus, getting billions of dollars of Bitcoin already inserted into, is it billions of dollars? Is it
hundreds of millions.
250 million.
There's 350 million staked on the Bitcoin side, and then about 350 million that's on-chain TVL as well.
TVL, and what's that? Is that stables?
It's mostly Bitcoin.
Mostly Bitcoin.
Yeah.
Epic. And then there's over 100 projects currently built on top of the chain.
And about another 100 waiting in the wings as well.
And 7 million plus users.
Yeah.
Incredible. And all of this in what, 2 years? A little bit less than 2 years?
A little bit less, yeah.
Incredible. Now, how did you get started? What's the come up of the entrepreneurial journey? Because obviously you didn't start at this place with 7 million plus users, $1 billion in market cap. Where did it all get started? What was your first kind of taste of entrepreneurship?
I was gonna say, it depends on how far back you want to go. So I started really young. I've got like the lemonade stand story and like all that bullshit, but, sorry, can you swear on this?
Yeah, for sure,
Awesome.
No worries.
But it really started in college. So in college, I went to BC. I met this really interesting group of folks, and there was this Boston College venture competition. And I learned what startups were for the first time, and it made sense to me for the first time that like you could carve a path out there where there was the possibility to go create. And like by definition, I'm a very creative person, and that's just how my brain works. And I was never quite cut out for having a boss, I think is the right way to put that. And through that journey, we met a lot of interesting startups that were in the BC ecosystem. Like one of them was WePay that was out of Y Combinator, and there were all these interesting pieces where we got exposed to the startup scene, not just in Boston, but also in Silicon Valley. And then I think it was 2011, we did a trip called Tech Trek. It brought us through to Facebook, Google, and I was just mind blown. I was like, wow, this is what you can create from 0 to 1 if you're a founder. And I knew that's what I wanted to do with the rest of my career. So I think we built our first company. We were 18, went absolutely nowhere, but we learned a ton of lessons. And then from there, we tried a bunch of other stuff, found myself in Silicon Valley, and I can kind of dive through that kind of part of the career arc as well. But super young and knew pretty early on that I wanted to build stuff.
Now, you were self-taught, and a lot of what you've accomplished is through self-education. A lot of people think that in order to get started or build a meaningful or successful career that you have to have some sort of formal education. Run me through that process where you're like, hey, you know what, entrepreneurship seems like the logical route. I don't want to have a boss. I want to be a boss. I want to kind of create and do my own thing, to actually rolling up the sleeves and now actually getting good at the craft. What's the process there?
So part of that is like, inert is part of me, is like I am kind of a very self-driven, self-motivated person where if I want to learn something, I can just focus on it for like 12 hours at a time and eventually like kind of pick it up pretty quickly. But it was more that I had all these ideas to run businesses, but no one to build them. And that was really my problem. I tell everybody that like I was a self-taught engineer. I almost failed like my intro to programming class because I couldn't pay attention. Like it was so boring and so whatever. But then very quickly I taught myself how to program and like, far surpassed what that was supposed to be. But it was more that people couldn't kind of get with my vision of the world. They couldn't see where I was trying to bring stuff, and I had to teach myself. But it wound up being a really amazing process because I understood the nuts and bolts of what it really takes to build these things. And I think the unfair advantage, particularly in crypto, is if you have a business mind and engineering background. I told people for years before I did crypto full time was, this was what was meant for me. Like I studied economics and information systems. That's what crypto is, like fundamentally. But back in 2009, obviously like those dots weren't connected. Like that made no sense. Those were two like totally separate things that made no sense in overlap. And then once crypto clicked, it made perfect sense.
Now, crypto clicks, it makes sense. You dive first in, but initially you're working at Coinbase, right? That was your first exposure in crypto with the crypto kind of scene, or were you had some stuff that before you did wallets, you had a couple own projects rolling before, but before corendao, what was kind of like your crypto scene?
So going back to college quickly, we had a professor that was teaching us information security. He tried to get us involved in Bitcoin, I think in 2011.
Wow.
He has some serious bags. I was like, magic internet money, like this doesn't make any sense.
Yeah.
Like I didn't understand the thesis behind it. And then one of the other initial contributors to Core, CJ, he actually started in 2012. I missed that run from like 20 bucks to like 200 or whatever. And then I was like, all right, 2013, let me read the Bitcoin white paper, like figure it all out. And it just clicked. Like it made sense to me, this alternative traditional financial system, non-sovereign store of value. Like I was totally hooked. It made a lot of sense to me. Kind of dabbled around for a couple years, just like getting more involved in Bitcoin, understanding nuts and bolts, but got a little kind of bored of it because there wasn't a ton going on at that point, but I was just kind of stacking sats the whole time. The Ethereum pitch is what really brought me over the line as, wait a second, now you can have programmable money. Like now, like all of that worked really well in my head of, oh, this is really interesting. This is what I want to spend the rest of my career on. I was working in a variety of startups in between there, and then eventually found my way to Coinbase. And Coinbase was like finishing school for crypto. It's kind of how I think about it. It was a really tricky time for Coinbase when I joined. Market was really shit. There was, again, a lot of promise of what this could be, but a lot of uncertainty. And like one of the stories that I love to tell was, I remember in 2020 when we had the COVID crash, where I swear if Arthur and team at BitMEX didn't turn off the liquidation engine,
It was over.
It was over.
It was
like,
over.
Like crypto was over.
I remember, bro. I remember. I was playing Call of Duty, and I'm watching Twitter as well, and I'm like, I see all the orders fill on Kraken, but the thing keeps going lower and lower and lower. And then I see on Twitter, it's like Arthur Hayes turned off.
Totally.
I'm like, bro, this shit's crazy.
I was gonna say, we pray to Arthur, like thanks again for keeping us all here and giving us jobs. But that was wild, and like there was so much doubt. And then you flash forward, DeFi summer comes along, like things change so dramatically. But at Coinbase it was amazing. Like got fully like immersed in kind of seeing the future a little bit. And like that's what's nice about big companies is you get to have a really wide landscape, talk to so many interesting teams. Like all of that was pretty cool. But for me, what was kind of stuck in the back of my head was it was very Ethereum centric, and most of the projects that people were building were all focused away from Bitcoin. And that to me was a trade-off that wasn't awesome. Like Bitcoin was what got me into crypto, decentralization so important, and that was kind of some of the genesis of me getting involved with corendao.
So let's jump into corendao. You look at Bitcoin, you say, hey, this thesis makes sense. There's this other vertical, Ethereum, programmable money, all these other chains, all the temptations of building on the next hottest thing. What is the determining factor? We see now L2s, L1s, all these ecosystems being built on top of Bitcoin. Why was that the obvious choice, or what was the logic or the thought process through building on there versus somewhere else? And how's the build so far?
So kind of the original ideation of like the whole piece was really in reaction to the 2017 cycle. 2017 cycle is where crypto really switched, and it became about launching projects, launching tokens. Like prior to 2017 cycle, like there was a bunch of proof of work forks, like there really wasn't that much going on. And as that kind of developed, we saw the beginning of what I think is a pretty unacceptable trade-off in crypto, which was performance for decentralization. And that really peaked as part of the 2021 cycle, where you saw so many of these tokens launching, where it was 70% insider control, whether that's investors, founders, et cetera. And that was like an allergic reaction to the initial contributors of Core, where it's like, why would we be trying to build this, this freedom money, if you will, if it's controlled by a small group of people? Like that in of itself is a violation of why we're all here. It's the piece of the triangle of the scalability trilemma that you cannot actually trade off. And that kind of rubbed everybody the wrong way. And by kind of going about it from first principles, it was, well, what if we take some of the best parts of the programmable money space, the scalability, all that sort of stuff, but mix it with the decentralization of Bitcoin? Like what if we tried to hybridize those two things? And that was the original genesis of what became Core. And it went through many different iterations. And again, there's this larger kind of component with the Bitcoin security budget and ensuring that the Bitcoin network remains healthy and decentralized. Since then, Bitcoin staking has been introduced. But the idea went from, hey, how do we take Bitcoin, Ethereum, hybridize and take the best pieces to how do we scale Bitcoin, bring it to billions of people around the world and build the next great L1.
Now, when it comes to like building on top of Bitcoin and specifically on Bitcoin, how expensive is it when it comes to transacting and interacting with the actual chain? Is it something that pretty much bundles up all transactions and then fulfills it through one order? Or how does it work specifically with Core so that the user gets, let's say, a better rate or better fees than they would on Bitcoin?
So let me take a quick step back and talk about maybe the Bitcoin scaling landscape at a high level.
Please.
So you've got, broadly speaking, side chains and what will potentially become L2s in Ethereum parlance. And in the L2 side, many of those chains hope to use Bitcoin as a data availability layer or write their state back to Bitcoin on some sort of regular interval. Similar to what we have in the Ethereum side, but with worse trust assumptions, more expensive fees, lower data throughput, that sort of thing. On the sidechain space, which is where Core lives, we actually have more flexibility and more ability to minimize the bad parts and emphasize the good parts, if you will. And Core's Consensus Satoshi Plus actually has this novel process that's kind of an alternative to merge mining, which is this trustless delegation of Bitcoin hash rate. And there's over 55% of the Bitcoin hash that's currently delegating to Core. But the idea is we try to take some of the good parts of Bitcoin that work in terms of the decentralization, security, et cetera, and then merge that with some of the pieces that are more optimized for scalability. And in those cases, that's our delegated proof of stake that's split between Bitcoin and Core itself. But it allows us to kind of take what we leave and leave what we don't. And we used to refer to that as cafeteria crypto. I don't know that one ever really caught on, but that's kind of how we interact.
Pick and choose, yeah.
100% pick and choose. And that's how we take we get the miners involved and help reward them as kind of a second Bitcoin block reward. But recently with Bitcoin staking, now any Bitcoin holder can stake their Bitcoin and earn passive risk-free yield on top of Core.
Incredible, incredible. That's phenomenal to know. And obviously the yield's going to fluctuate in percentage as the market cycles in and out. So how would people participate in that? Let's say I have a Bitcoin, 2 Bitcoin, 3 Bitcoin. How would I go about it? I'm like, hey, I want to get some yield on my Bitcoin. I don't want it just sitting on my wallet. How would I go about it?
So shameless plug, download Element Wallet. It's the easiest, most intuitive way to go stake your Bitcoin in kind of like this one-click interface. But you can use OKX Wallet, I think soon Fireblocks, like a bunch of these kind of more institutional providers and just more name brand providers as well. But the idea of Core's Bitcoin staking is it uses native Bitcoin time locks. And what that means is you're actually never giving up custody of your Bitcoin. You're never sending it to someone. There's no multi-sig. And that was designed by folks like me who've been in Bitcoin for a long time that don't view giving up custody as an acceptable solution. We probably all have friends that were in Genesis, Celsius, all of these. And it was really terrible. And again, it's like not your keys, not your coins, which again is a kind of a classic Bitcoinism, but is more true now than ever. And the second piece is, if you don't know where the yield is coming from, you are the yield, and we've seen that play out many times. And in the Core system, it's super easy to understand. By using the time locks, you encumber those funds, so you can't trade them or move them for some period of time, but you're only trusting Bitcoin. And by helping give some economic security to the Core chain, you then get Core rewards. With that, you can either continue to stake those, or you can, sell those for, your own purposes. But this yield that you mentioned in terms of the floating rate, that's totally true. And how we delineate that on the website is by looking at the relative price of Core and Bitcoin, which can either work for you or against you, depending on the exchange rate between the two. One of the big pieces is, so Core has a very long-term emissions curve. It's 81 years. Most projects are about 5 years. So this is a very different curve, because the idea is to have this very slow, gradual decline where it continues to help provide this exogenous subsidy for Bitcoin holders and Bitcoin miners. But we recently introduced dual staking, and dual staking is very critical to the overall sustainability of this yield, because not only is there this security arrangement between Bitcoin and Core, now there's actually a capital arrangement where these Bitcoin holders are actually now incentivized to restake their Core that they get as part of this yield on their Bitcoin to earn increasing amounts of return on their Bitcoin, which creates a nice reflexive loop.
Which is interesting, because if you actually think about the average user, the average holder, they don't do anything with their Bitcoin. They just sit on it and that's it. So if you can remove the, hey, I don't have to give up my coins, or at least custody, because it's some sort of Celsius BlockFi bullshit, then this is interesting, specifically under the premise that we've been talking about, which is kind of where I want to shift the conversation, which is how we currently see the landscape of crypto. We see a lot of player versus player, cabal murdering retail. We see founders kind of launching projects just to either do one cycle or to just, like you said, the initial momentum volume and then call it a day, whatever, I'm done. What's interesting here is you were talking about kind of like the long-term perspective of Core and how it aligns long-term perspective with Bitcoin. Where do you see the project 5-10 years down the road? What's your vision? I know you guys are pretty heavy duty in Asia right now. You guys are pretty strong over there, trying to gain traction in the Western kind of ecosystems. What's the mindset? What's the long-term play?
So Core is a very long-term oriented project. I mean, people talk to me all the time, like, are you multi-cycle or whatever? We're multi-decade. And you need to think about the opportunity of Bitcoin. And this is what I kind of try to reset people on. Right now, there's a $1 trillion asset in Bitcoin. I think we all see a path towards at least the market cap of gold, which is like roughly 20 trillion, 17, 18 trillion, whatever. That's a 17x from here. If you think in traditional startup land, you talk about attacking maybe multi-$100 billion markets as like a very attractive opportunity. There's an easy path here to a multi-trillion dollar opportunity. It's already $1 trillion today. I can't think of a more exciting space to go play in.
I agree, bro.
And I think if you look at it, where's the capital flowing? Look at these Bitcoin ETFs. So we've already surpassed every analyst expectation of how much money could come into these things. And again, let's flash it forward 10 years. You could have $1 trillion in these Bitcoin ETFs. And Core's already taken some pretty impressive steps here where we already have the first yield-bearing ETPs that are live throughout Europe. We plan to take those to Asia and the Middle East, and eventually when the US supports some of these products, we'll do that here too, with the ultimate goal of eventually getting these ETFs and having them be yield-bearing as well. And again, Wall Street won't stop at spot. They'll want more derivatives, they'll want yield. Like, that's where Wall Street makes its money.
They're gonna get all the financial products out.
100%. And Core wants to be that yield layer on top of it. And again, we think that's a massive opportunity.
Do you see them doing a lot of this like staking and a lot of like this these plays like BlackRock, Fidelity? Do you see them doing it on chain?
I think it will happen on chain.
I think so too.
I think there's going to be a premium for doing this with retaining custody. Like, as of now, like, we're in the very rare group of folks that are comfortable on chain. There's gonna be a lot of folks that will never get comfortable, particularly people that are buying ETFs.
Yeah, most people. I was talking with one of the heads of Binance, and he was telling me, Luke, do you know what the #1 question we get at customer support? I'm like, what? I thought it was gonna be some complicated, how to reset my password.
100%. So I tell people, and like, my ex-coworkers won't be too happy, but I tell people, like, what was Coinbase's original product market fit? It was forgot password for your wallet. And that became a moat, right? Because it's just too difficult, and it's still too difficult today. But that potential is really, really big. And I think if you just look at it as like, these businesses of L1s need to be treated as businesses.
Yes.
Like, the old model of just launching a token and being done, I think is toxic and needs to go away. These need to be revenue generating. You've got transaction fees, you've got value added services. And with some of these yield products, eventually, like, there is potential for fees. And I think on a big enough capital asset, that's a really great business. And I think eventually you'll be able to view these businesses based on their fundamentals, not just based on more kind of speculation. And that's how this space will mature and will grow. And I think that's how we'll get more and more mainstream adoption.
And I agree with you. When you're talking about this concept of it's the most exciting place to be in, it is, because you look at the asymmetrical bet. You look at how much work you have to put in. You have to clock in regardless of what you do. In entrepreneurship, you have to work. So whether you're doing e-com, whether you're selling cat toys or clipping hair, you still have to clock in X amount of hours. So it's all about asymmetrical return, risk reward. The reward is so high when it comes to, you could be a successful founder. You don't even have to be #1. You could be #9 and still do extremely well. You could learn a ton in the process, get a ton of experience. If the project succeeds or not, you're not going to be stuck with like a Web 2 kind of consequence. Web 2 consequence is you're KO'd, you're done. At least in Web 3 crypto, you have the ability to weather the projects, because everybody knows the risk in crypto. It's like, what, 10%, 1% of projects succeed, maybe?
Really low, yeah.
So,
well, meme coins have diluted that.
Okay, so let's get rid of those. Yeah, so beside that premise, but most tokens are either 1 cycle, 2 cycles, things of this nature. So once you start playing this long-term narrative and long-term perspective like you were talking about, it's this idea that a new industry has been created. And what I assimilate it to, Rich, is the California gold rush. And the California gold rush assimilation is that the miners weren't the only ones that got rich. 2 bankers rolled over and said, hey, we're gonna store people's gold, Mr. Wells and Mr. Fargo. now they have a $10 trillion AUM. You had Levi Strauss from Levi Jeans, created jeans. So there's all these opportunities to get rich. So when people look at crypto and they're like, oh, well, I'm too late because I didn't buy Bitcoin. No, there's more to it. There's an industry that's being created. You saw, hey, Bitcoin is the gold rush. There's an industry being created. But like you said, it's not a two-month industry. It's not a 2-year industry. It's a 200-year industry. Like there are real longevity plays. Bitcoin's not going anywhere. Your long-term perspective with Bitcoin, what's your kind of thesis there? Does it get taken over? Does it get psyoped? Is it psyoped? I would love to hear your perspective on that front. Do you see another competitor coming in, overtaking, or is it always going to hold that hierarchy?
I think it's going to be really hard to unseat Bitcoin as the largest crypto asset. I think it has such this like beautiful genesis. It has this pseudonymous founder. Like, again, one of the greatest gifts that Satoshi brought to the world was by remaining anonymous, right? Like by no one knowing his identity, that prevented so many like nation state level attacks, right? And that's so hard to replicate. Like, I don't know if that's possible to have, like as an L1, right? Like you need faces, you need people that are there to help build trust in the community. There was no trust then, right? And like, I don't know if that is replicable. I don't think it
sounds miraculous, right?
Well, I mean, that's where all the like conspiracy theories comes, like, because it's crazy, right? But like you get this collective belief, people eventually start to believe in it. And again, I don't think we can kind of recreate that. I don't think it's been psyoped. I think it's actually now been accepted. Because there was this whole thing for the last 15 years of trying to get not only the accessibility, but also the legitimacy of the asset class. Bitcoin's not going anywhere now that we have these ETFs. Like, it is here to stay, and that's huge for crypto overall, because now we have this flag bearer asset that's there forever. There are some centralization concerns though, and I think that is fair, and that's actually one of the reasons that Core exists, is there is some world where Bitcoin security gets called into question because of the various halvenings, et cetera, and it becomes less profitable to mine Bitcoin. Well, if Wall Street has 5 trillion ETFs, they're probably not going to let that go to zero. They might become miners, and they might run at a huge loss or whatever, and actually have a much more...
As long as they're making it up on the fee.
Totally. As long as you're making it up on like you change the economics because now you have these centralized ways to make money off of it. And I think that is dangerous. Like that would devalue a lot of the like kind of special properties of Bitcoin and the security of the network itself to some degree, because then could Fidelity or someone else like reverse your transaction? I don't know. So I think that's one of the reasons Core exists, because we have to help keep these miners profitable and decentralized, because that's good for the health of the network. In long term, that will help this, continue to grow and evolve. But this is part of the maturity. Like, I think if you could have asked me, years ago, would it be positive for a Bitcoin ETF? My answer is the same as it is today. It's hugely positive. Like, we need to get to mainstream adoption for this thing to grow and to overtake the market cap of gold.
What are your thoughts on this 2024, 2025 bull run, maybe 2026, tapping into that? What are your thoughts? What are you seeing as trends? What are you seeing as like hot narratives? We see memes rolling around. Last bull run, we had NFTs. The bull run before that, we had these MetaMask ICOs. Now we have Bitcoin, these layer ones. Bitcoin's become a very heavy topic of conversation, but we've also seen there be like a lot of fluff in that space and a lot of like foam that kind of floated to the top and got removed, and the substance actually was able to stick around. What are your thoughts on kind of this bull run? What are your perspectives? What are you seeing? What are some things that are catching your attention?
I've never heard of the foam analogy. I love that. I'm definitely going to use that. You just get rid of the skim. So I think from like a macro point of view, I think we actually are set up for a super cycle, because I think these Bitcoin ETFs have changed the capital flows of Bitcoin. Like historically, in every bull run, you see Bitcoin price appreciation. It then flows into major alts, and then kind of in longer tail alts. Like we've seen that story now repeat multiple times. And now you have, with the Bitcoin ETFs, significantly dampened volatility. And I think that's good, like in terms of like the maturation of the asset class overall. But that vol is now like you're getting pushed further and further out on the risk spectrum, right? And you're seeing some of these like Bitcoin assets as like high beta Bitcoin plays, and that's some of like the liquid theory of a lot of these folks, because you need to go, like that's what makes crypto interesting, is that it is like a 100 vol asset, right? So at least historically, and I think that's true. So I think it's going to take a longer time to disperse, but net that's healthier. We'd rather have a longer bull run than a shorter, more violent bull run, at least in my opinion. And I think the macro landscape is also playing out pretty well. I think I'm not as bearish that if the Democrats win, like all of crypto goes to zero. I think maybe it's not as violent as if Trump wins, but I think net, it's still very good for crypto. And over time, that plus, we're gonna have some rate cuts, we're gonna have general easing. All of that is a very, very potent combination. I mean, if you were to ask me a couple years ago, we're at 5.5%, Bitcoin's at 75,000, I'd be like, you're crazy, right? Like I never would have believed that's possible. Yeah. What does it look like if we get to 3% here? Like that could be
and hold it.
And then not only that, but like if we get a couple bad prints and we have to, if we have to lower rates on a pretty expedited timescale, yeah, the market might get spooked, but I don't know. Like, what does it look like at around 0% if unemployment goes to 7%? Like, things change.
Yeah.
Right. Like, so it gets really interesting really quickly.
Yeah, I agree fully. And something I've been kind of conceptualizing specifically around this bull run is, unlike before, retail now has more tools and more access to compete. So when I look at this bull run, I look at softwares, platforms, bots, all these things that weren't really available when I was kind of playing the retail side. But I've also come to realize trading in the space isn't the only way to make money, right? We've made money in different ways, which is like building, being involved, investing, things like that. To people that are considering building in this space, they're like, hey, you know what? Like, okay, Rich, cool. You got millions of dollars. You can play the decade game. Yeah, I don't have the decade to play because I don't have that much money and I need to generate revenue. I need a salary. But they're looking at the crypto space to see the opportunity. What is your advice to get involved with projects? What is your advice to get involved with communities? Because a lot of people will be like, well, Rich, he runs a top 100 project, multi-billion-dollar market cap. Oh, he's probably unapproachable. You probably can't talk to him. You won't be able to reach him. But in crypto, you have so much access in direct communication with founders, with core kind of innovators. For people trying to get involved, trying to build in this space, what is your advice? How do they connect? What's the best approach? Should they be investing, building? Should they be kind of interacting with the community, doing community service? Or what is your perspective? Where's the highest return for the builder, for the person that wants to create in the space?
So I think to think about the approachability, I think that's totally true. Like you can talk to most of the faces in any crypto project just openly at any conference. It's one of the coolest things. Like I've had to recently start getting used to that, where like people I've never seen
just coming up to me, hey Rich.
It's my Luke moment where like I'm not used to that, But it is really interesting from that point of view. It's a lot easier to chat with like crypto project folks versus like, Tim Cook over at Apple, right? Yeah. Like now obviously the scale of that's very different, but in terms of the approachability, and I think crypto for the most part is from a project contributor point of view is about growing the pie. There are PvP dynamics, but it's very different than like meme coins or other things, right? Where it is like you're in the trenches fighting each other, right? And overall, like we kind of all are hinging on each other's success in some ways. Like again, like the wealth effect in Solana last year benefited Ethereum, it benefited a lot of L2s. Like it's one of those things where it is kind of the same general base playing in these different ecosystems in some way, shape, or form. But I think in terms of being a builder takes many shapes, and that can be being an ambassador, or it can mean creating your own L1. But it all is kind of where you're at and your kind of task relevant maturity where you can add value. What I would say is the best time to start is always today. Figure out where you can get involved. It can be making memes, it can be writing documentation, like there is something for everyone. But one of the coolest things about crypto is there's very little hierarchy. Like Core is a DAO. With a DAO, it's extremely flat. Anybody can do anything for the most part. And with that, that's a great opportunity for people that are younger in their career to be a 25-year-old or whatever that has a major role. Like you see all these intern accounts, like that's not a joke. Like a lot of these interns wound up being pretty successful and maybe leading growth at a major product. So I think that's one of the coolest part about it is it can be kind of lightning in a bottle. What I would say is just make sure when you're getting involved in any product that you're aligned with the long-term vision and you think people are in it for the right reasons, because the unfortunate part of crypto is a lot of it is PvP and a lot of people are not in it for the right reasons. And that philosophical alignment is really critical Because man, times are tough, and when you get to bear markets, like people do all sorts of bad stuff. So it's just important to kind of maintain that moral compass and be focused in the right direction.
Talking about bear markets, I want to talk about that real quick. You know, there's people that listen to this. You have a dynamic of entrepreneurs. You have people that are building projects, people that are investors. For the people that are building projects, what are some keys to ensure your project is bear market proof, or at least reduces its liabilities of complete failure?
So I think bear markets are actually the best time in crypto. Not from like a appreciation point of view, obviously, but that's where the real building gets done. And that's where you eliminate a lot of foam, as you called it, because many of these people are in it for short-term games. They're not trying to build. And in the bear market, that's where you do your best work. That's where you build your team. That's where you get ready for the next product direction. And Core launched in early 2023. So again, before this whole Bitcoin narrative kicked off everything, in the absolute bottom of the bear market. And I think it was one of the best moves that we made, not only because it helped show people, hey, we're in this for the right reason, not trying to play into some narrative, but also because this shows you that you're actually long-term committed to making something successful. It's different than once the narrative gets hot, the bull market goes around, all the tokens are trying to rush to exchanges, like people are just trying to end it. And that's just, again, like you kind of prove your worth there. It's also the best time to hire. Because every time bear market rolls around, the pedestrians in the crypto space, the people that don't want to be here, they flood for the exits. Like I remember after the 2021 cycle, whatever, Coinbase went from a few hundred people, mid-hundreds or whatever, to 6,500. And obviously it was a painful time with layoffs and other stuff, whatever. But most of those people just went right back to their same job at Google or Facebook, right? Like nothing changed. They took a little detour, on the bus for 6 months or whatever. And that's good. Those people aren't the people to build projects for the long term, right? So we use the bear market, super effectively. We, found so many amazing contributors, and those contributors are a reason that Core's where it's at today.
People talk about building like a successful company or a successful project or casting a vision that people rally behind, but it's a lot different when you're doing it in a DAO format. How do you keep people motivated? How do you keep the vision aligned? Because you said, in the beginning you said, there's this version of reality that's being painted that doesn't suit with the version of reality that I think fits better. So how do you get people to adopt the version that is being created, but because it's a DAO and it's not a, hey, here's your 9-to-5 salary, you have to come in like code and you have to come and work or do X, Y, and Z. I'm sure there's people on salaries and stuff like that, but how do you keep the motivation? How do you keep the vision for people in a decentralized format?
So one of the biggest differentiators of Core, and something that we pride ourselves on, is a lot of the folks that are responsible for trying to lead some of these different initiatives have a lot of operating experience. Like I've been building companies now for 15 years. And if you look at other people that have been involved with the team or initial contributors, it's 10 years, 20 years. Like it's a lot of veteran folks, and many of us cut our teeth in startups or other ecosystems like Silicon Valley. And with that, we bring a degree of rigor to this process and best practices. And the unfortunate part is many crypto projects, particularly DAOs, are people that don't understand how to run a business. And with that, they're just kind of shit shows from day one, because it's just chickens with their heads cut off. And there's a lot of problems there. But like we do a lot of the basics right, mission, vision, values. We talk about operating cadence. We have the right idea that, hey, we're 1% of the way through this journey. And it's finding people that are mission aligned, that understand that rigor, and also understand that there's the opportunity here to 10 or 100x your career if you do it right. And like what I tell folks, it's like, hey, if you fit in at Core, do your best work here, whatever, let me help you do what's next, right? It's that kind of classic Silicon Valley motivation where, I want to be your first check in your business, right? Like that is how I help grow, and that how I spread, my tree, if you will, like kind of throughout it. But that really matters. And again, it's also as part of this hiring process being super selective, trying to find people. And again, people can always contribute in their own way, but as people that really kind of are involved on a day-to-day basis, it's a high bar. And kind of that combination leads to really high performers. And then it's my job to kind of work with these folks to ensure that everybody in the whole organization feels that we're 1% of the way through that mission every day. Like one of the stories, or one of the questions that I get at almost every crypto conference is, hey, Rich, like you guys are, X number my market cap, you've got X amount of users, or TVL. It's like, why are you still doing this? And I'm sitting here, I'm like, because we haven't even started yet. Like the training wheels are still on the bike. There's so much opportunity here. And it's my job to make sure that, or like it's the whole DAO's job to make sure that culture is instilled so deeply, because that's how we can build, you know, the next great blockchain. But again, it's trying to remember the best practices and, you know, really kind of living up to them.
I was thinking about whether it was Satoshi was a one individual guy or whether it was a group of people, they have to have been working on this for a lot longer than people expect. I don't think this took 30 days and it just rolled out and it just cooked up. And what I've come to realize is people want to build, but they don't understand how long it actually takes to build. Like building is a bitch, bro. Like it's a process. And as simple things like I asked yesterday an entrepreneur that I was talking with, I was like, how long does it take for an onion to grow? From seed to full, and he didn't know. I was like, okay,
no idea.
You have no idea. It's 100 days. How can you expect to become a millionaire in less of the growth span than an onion grows, right? So it's like you look at these things and people have like these short-term perspective of how the world works because they've been corrupted by some million X meme coin bullshit. But it's not realistic. It's a long-term approach, and I agree with you. You need to find long-term people and people that understand that it is a long-term play. If they're only looking at a cycle, they're gonna try to maximize, max potential, and then get out. How do you find missionaries versus mercenaries?
Such a hard question. So with that, I mean, I think people reveal their true colors pretty quickly if you know how to ask the right questions. Like, it's hard to pretend to be someone else for a really long period of time. It's also hard to have a body of work that doesn't represent what you actually have achieved or accomplished over time, and it becomes pretty easy to figure out like who's bullshitting you and who's actually like done the work underneath it. But one of the nice parts about crypto is people are very transparent. And like in traditional whatever, like people kind of put on airs more when it comes to these things. In crypto, people are usually pretty transparent where it's like, hey, I need to make X in like 6 months or I'm out, whatever. It's like, great, you're never gonna be a fit here, but thanks so much for telling me that because maybe I know someone that can help you or something, I don't know. But that actually really helps. And then on top of it, it's finding people that haven't necessarily made their mark yet. Because there's so much hunger in many of these, like that's why I love crypto. It's so global from day one. Like, yeah, it's weird. You're a Series A company that is essentially public in some ways, like which is nuts from like a mental model. But it's also you're a decentralized global conglomerate from day one, right? So like you get these very crazy pressures, but it allows you to hire the best talent anywhere in the world. And that has been such an unfair advantage because there's amazing people in every corner of the world. And there's so many people that want to go out there and do that, but have never been enabled, have never had the opportunity to go out there and do that. And that's one of the most amazing parts about crypto is there's so much surface area. Like, oh, you want to launch in, like Bangladesh. Okay, it's like you probably need a community manager. You probably need a GM that covers that in a couple other regions. All right, that person might have formerly had a team of like 2 people or maybe never had a team before. Now they have to go build a 20-person ambassador team. Like, that's such a step up. Where outside of crypto, maybe you never get that opportunity, and it's about sharing that kind of horizon and that timeline with these folks, and it becomes pretty easy, in a very metrics-oriented way. Again, going back to best practices, are you hitting KPIs or not?
And you see it in their actions, their day-to-day actions. Totally. You see it in the macro attitude perspective. I
100%.
Agree. Yeah. Wrapping up, I have a couple questions specifically around this idea of why so many projects exist and they build all this tech, but then nobody uses it. Right? So you have 7 million plus people operating inside of the core ecosystem. People are struggling to get 1,000 people to interact with their products. They're like, hey, the tech's good, like this is good stuff. Talk to me about the importance of marketing, distribution, but then also the retention, the stickiness factor to keep people inside of your ecosystem as opposed to going to the next shiny object.
Build stuff people want. Like it's as simple as that. And like how we characterize it is Core is a product-focused blockchain, not a research-focused blockchain. And that's actually one of the reasons, to your point, why there is such a proliferation of projects. It's because it's some research insight that people think is a world beater, and then they have no second act and it collapses. But like there's some points farming or like some program and like maybe they cash out or something along the way. But that's why no one uses these things or whatever, because it's just all infra that no one really cares about.
Yeah.
Versus Core's approach is, hey, there's all this amazing technology out there, some of which we create, some of which is inspired by others. How do we go get that to people faster, iterate really quickly, and then grow it and scale it? Like one of the cool parts is you have this general purpose platform. You can actually have 20 businesses running in parallel, all of which can be of consequence. But it's important to use the user as your ultimate test of does that work or not. And that's been the problem with crypto for many cycles is, wow, flash, everything goes whatever, and then there's 5 people that use it. And it's like, there's no business potential there. You can't build a business in crypto with 5 users, like unless they're, I don't know, crazy whales or something. I don't know, it'd have to be something super weird. But like with that, like that's kind of our focus and our philosophy, and we try to spread that as well. And like people ask us all the time, what's the secret sauce? And we're like, we just try to build stuff people want. And I think not enough of that is done in crypto today.
I agree, and people are also building other things that they've seen other people succeed at.
Totally.
And they just want the second wind or the third wind or the fourth wind or even the fifth wind. We see all these like little bullshit iterations. Last couple years in entrepreneurship, wrapping up, what are probably some of the most fundamental principles that you've learned? You talk a lot about 0 to 1. It seems to be something that is really ingrained or something that you repeatedly comes to mind. Explain to me the principle of 0 to 1. Why is it important to you? What's the philosophy behind it?
With my personality set and that sort of thing, I am like a trailblazer, a pioneer. When things start to get too figured out, it's not interesting to me. And like, I'm a very binary person. I'm either 100% invested or not at all. And to tell one funny anecdote, in college, my grades were like a total distribution of 2 opposite ends of the spectrum. I either loved the class and I knew everything about it, or I knew absolutely nothing and did terrible. And no one could understand it because they were like, you're not dumb. And I was like, no, if I'm not interested, I won't do it. And like that is kind of carried forward into my entrepreneur career. Is like the moment I lose interest in it, it's gone. And that's why it's so important to have such big challenges in front of me where I know I can dig my teeth into this for 10, 20 years, because that's enough of a opportunity for me to get really excited about because it offers so much of a surface area to go after. But in terms of that like 0 to 1 mentality, I think a lot of that comes from, kind of the Thiel school of, startup building, as well as the Bezos school, which is like, if you look at, one of Bezos' famous letters, it was like, it's always day one at Amazon. And like, that's 100% the right mindset. And I don't think people internalize that, especially in crypto. In crypto, we have a lot of like fake genius theory, which is you make a lot of money or whatever, and of course you're super smart and you did everything right. And it's like, no, you got lucky. And like, that's the vast majority of what this space has been. And we need to invert that to, no, this was actually really something that you built. And the way that you do that is by always re-anchoring yourself and always telling yourself that you suck and you can always do better. And that's like, as tough of a mindset as that for people to get in, that's how you become like a champion, right? Is like, you have to be willing to push through it. And as they say, chew glass every day.
I'm about to put in my Slack, my team Slack after our money talks, and I'll be like, it's day 1 at Capital Club, ladies and gentlemen, we're just getting started. It's interesting. I appreciate you hopping on. I look forward to part 2, about 6 months, kind of seeing the progress, of course, seeing where the progress is of the bull run. Last piece of advice, people listening, entrepreneurs, people wanting to kind of move forward in their career. What's the piece of advice?
So first and foremost, really enjoyed it. Excited to chat more in 6 months. So this will go with a book recommendation. It's the smallest little book. It's called Finite and Infinite Games. It was the best book I've ever read, and it's like 80-point font or something. So like it takes even the slowest reader like an hour, right?
Wow.
But
what's it called again?
Finite and Infinite Games by James P. Carse. He's this NYU professor. And it's like a very abbreviated idea of game theory, but told in like a very kind of plain English explanation. But the idea is, in most business, people treat it as a finite game, yes. Meaning there's a distinctive endpoint, and I'm trying to optimize my moves in some amount of steps. That is very toxic for the most part because it doesn't allow you to see the bigger picture. If you view things, with the infinite games mindset, there's always more moves. Like the chessboard is infinite. And if you can go from zero sum to positive sum thinking in that way, it allows you to play at a very different scale. And I think that was something that I learned, I think probably like 25 or something, and it totally changed my entire outlook, not just in how I do business, but also in terms of relationships and other things. So I would highly recommend getting in that mindset and reading the book.
Long-term games with long-term people.
100%.
Amazing. Rich, thanks so much for coming on Money Talks.
Really enjoyed it.
Ladies and gentlemen, that was another episode of Money Talks, an exclusive conversation with some of the most brilliant minds in business, entrepreneurship, and finance. We understand where the world is headed, There's an alternative system being created that's being built by some of the most brilliant people in the world to compete with traditional finance, centralized banking, the Federal Reserve. These systems are being created, they're being evolved day by day, and I look forward to continue bringing you guys some of the best people in the space to talk about crypto, to talk about Bitcoin, to talk about decentralization like we've never done before. We'll see you guys on the next one.